Hello and welcome. We are now joined by the management of Gensol Engineering, Anmol Singh Jaggi, co-founder Gensol Engineering. Now remember that Gensol Engineering is likely to raise 600 crore rupees to strengthen balance sheet and accelerate a zero net debt goal. And out of that, 400 crores is likely to be raised through issuance of foreign currency convertible bonds, and 200 crore rupees is likely to be raised through the issuance of warrants to promoters. Hello, Mr. Singh, Mr. Jaggi. Thank you so much for joining us today. Mr. Jaggi, tell us what are the important fundraise announcements and undertaken by the company, and what is the suggested timeline for this? The total size is, of course, 600 crore rupees. What would be the breakup for this, and how do you plan to achieve the zero debt goal?
Sure, ma'am. So we have today morning had a board meeting, and in that board meeting, we have agreed to raise 600 crores. The 600 crores will be raised by two instruments. The first instrument is a 400 crore FCCB instrument, which is there. And the second is a 200 crore promoter warrant round, which is there. The timeline for these will be between 8 to 12 weeks. The promoter warrant round can happen slightly sooner as it has a slightly smaller process. But in less than 1 quarter from now, we should be receiving the first tranche of the promoter money and the FCCB amount in our bank accounts. And on the other question that you have on how it will help us to reduce the debt. So today our fund-based debt is about 1150 crores. Out of that 1150 crores, we have already done two strategic divestments, which will help to get about 600 crores plus this equity round, which we have just announced. Both of these combined, we will be very close to the net debt situation. We will continue to repay debt through our organic cash flows also. Organic cash flows, divestment of car assets, divestment of subsidiary, and the new incoming equity will take us very close to the zero net debt. Further to that, as our business will continue to generate cash, we will repay all the debt and go to our ambition of being zero net debt.
Also, Mr. Jaggi, tell us what are going to be your future plans going ahead then?
So on the future plans, we have a very large order book, about 7,000 crores, which are there. We are always committed to our shareholders, our customers, our lenders, our vendors, and our team. And we are working hard that all of them are fully supported by us in this time. When we are working, our job is to execute the current large order book that we have and keep our customers and all our stakeholders happy. So the continued operations growth will be the only focus of the business.
Also, Mr. Jaggi, tell us what are going to be the segments that will be the focus areas for the company, including EVs.
So on the solar side, I think 90% or 80% of our revenue comes from the solar EPC side. And because we have a very strong focus and a very strong order book there, our whole aim will now be that we execute a lot on the solar side, and that is going to be where we are going to get 80-90% of our revenue. On the EV leasing side, we have already announced a divestment of almost half the assets which are there. If need be, we will divest more. And on the EV manufacturing side, our vehicle has already completed the first set of trials. When with more equity coming in, we should be able to accelerate the start of production in that plant.
Right, Mr. Jaggi, also the other thing that was announced is that the board has approved a stock split of 1:10. What is the rationale behind that?
Stock split does not impact the balance sheet. However, it changes the denomination of the stock. So the whole aim was to get the lower denomination for the stock.
Also, tell us, the company would be issuing share warrants worth 56 rupees per share. What would be the total amount to be raised? And, this fundraise, what will that be used for? And what is the premium that the warrants are likely to come at?
Yeah, so the warrants today, if you look at 56 rupees is at 1 rupee share price, 1 rupee face value of the share. When compared to the current 10 rupee, it is equal to 560 rupees. Our share price is about 262 rupees right now. So it is about 113% premium to the existing share price, which is there. So the promoters have deeply shown commitment to keep investing into the business. and by keep investing into the business at even at a premium amount, which is there. So we believe that the company has great value. We believe that the company can do very well. We have strong order book, and now with this equity raise, we will be able to execute a lot. So this is where that is what our feeling is. In the meantime, we also expect that shortly we should be able to get a rating upgrade also. Shortly means in about 1 to 1 and in about 1 to 2 quarters.
So the company has 625 crores of divestment underway. How much debt will be reduced and how much reserves are likely to go up by?
So our current reserves are close to 600 crores. And with this, both these investments coming in, and when both these investments come in, the reserves will almost double. Plus, whatever profits we make in the coming quarters will also get added to the reserves. My expectation is that over the next 2 quarters, the reserves of the company will double from here, from about 600 crores that we have to more than 1200 crores in 2 quarters. So that will be a very, very significant increase of reserves that we have. Similarly, on the debt side, based on the strategic divestments that we had announced, plus the new equity raise that we are doing, we should be able to take down our debt significantly from 1150 crores right now to 615 crores, 600 plus crores reduced due to divestments. And we could, due to more equity coming in, we should be able to reduce it further. My expectation is that our current debt equity ratio is about 2 is to 1. We should be actually be able to make it from 2 is to 1 to 0.5 is to 1 in the coming 2 quarters.
Mr. Jaggi, things went rather south for you after that, ICRA rating downgrade recently. Do you think that was justified?
I will not like to comment on whether it was justified or not, but definitely we are working hard to improve our rating. And like I mentioned, that in next 2 quarters time, we will expect that our rating will go up. We will be very true to all our lenders, and we will be very conservative in our assessments, and we will be making all our repayments on time. And this equity raise and divestments will help us to do it. So we will be on track to becoming and regaining whatever we have lost in the last few days.
Um, Mr. Jaggi, the final word, what would be your message to the shareholders? Because the stock has seen quite a drubbing, after, especially after that ICRA rating downgrade. What is your message to the shareholders out there then?
I just want to say that we are absolutely committed to all our shareholders. We are sad that the share price fell. We will build it back. We are working hard that we raise enough equity and we raise enough debt while keep on focusing on the large order book that we have. The order book is our strength, and we will, when executed, will generate a lot of profit and cash flow for us. With this cash flow, we will take down the debt further, and hopefully in 2 quarters' time, you will see Gensol regaining all its lost glory.
Here's wishing you all the best for that, Mr. Jaggi. But on that note, thank you so much for joining us today.
Thank you.
And well, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with more market action on the other side.